So, guys, tonight we're going to talk about an introduction to financial spread betting. So, fairly kind of high level stuff. Not meant to be too complex. Too kind of in your face. It's meant to give you an idea of financial markets, what to expect. What we do. It's a real kind of beginner's guide to getting yourself involved in the markets. Now, before I start, as always, the risk warning. Remember that spread betting and CFD trading carry a high risk or capital with the possibility of losing more than just an investment. These investments might be suitable for all people and only intended for people of the age of 18. Please ensure you're fully aware of the risks involved and necessary to independent financial advice. So, what is spread betting? Well, if you think a particular asset is going to rise or fall in price, you can invest in that price movement. So, there's plenty of theories out there, why things are going up, why things are going down. And you're going to break that down, in my opinion, into different sections. You've got the stock markets, the commodity markets, the bond market, and all these things. It doesn't really matter if you're an experienced financial investor or not. You've got an opinion. So that the crash in China, gold's going down, stocks going up. What does it mean? What does it matter? Well, it doesn't really matter, in my opinion. What any of that means. If you want to be a short-term trader or investor, all you're looking to do is get involved in that movement. And that can be a movement over a minute, 15 minutes, an hour, maybe a day. Okay, all you're looking for is that movement. It doesn't matter if something goes up exponentially, down exponentially. All you're looking for is that price movement. I think the benefits of spread betting are, obvious for everybody. I mean, it's a very low cost way of getting involved in lots of different things. You cut out the broker for a start, and broker fees, are astronomical when you look at, the true cost of doing things. And brokers are just a facilitator. They don't actually do anything for you. They might give you a bit of advice. They might give you, a bit of an insight. But essentially, all they're doing is executing your wishes. So if you do it yourself and save yourself 20%, why not? I think the big thing for me with spread betting is you can buy and you can sell. Now, there's a lot of controversy about short selling and selling things. It's bad. Daily Mail. Daily Mail readers don't sell things. It's bad. You have to sell things to make profit. So Apple goes up and it comes down. Microsoft goes up, it goes down. Facebook goes up, it goes down. Twitter, it went up, on its earnings and then came down, 5% after the earnings. So all these things, are down to you to decide. Things go up, things go down. Don't be, pigeonholed thinking that you have to figure out a trend, figure out, what things going to do in the next kind of 10 years. With spread betting, my average trade, I'm a professional fund manager, my average trade is 26 minutes. So I can make enough in a day, okay, a day's money in 26 minutes in the markets. So think about that. I think the big thing is there's no capital gains at the minute in the UK, so that's very nice for a lot of people in the UK. Now, there's different types of spread betting. Okay, the first one is rolling daily. So it provides you with, again, a lot of flexibility. What something can do within a day. So it's not that you're looking for something to move over a long period of time. You're thinking, what can something do in a day? It's going to go up, going to go down. I'm going to invest in that movement. Then you got quarterly, so a little bit longer term. So quarterly, I guess in market terms, is massive. 3 months. So what's the pound going to do? What's the euro going to do? Do you think the euro is going to be strong over the next 3 months, or is it going to be weak? Is Greece going to have its effect, etc., etc.? If you take an example of betting on the FTSE, so back when I did this presentation, the FTSE is back at 599. I mean, a long time ago. So we're trying to buy the FTSE, expecting it to rise at £10 a point. Well, winning scenario, bought the FTSE 6,000, went to 6,300. So we make our stake £10 per point, 300 points, £3,000 profit. Not very difficult to understand. Okay, a losing scenario is that the FTSE index falls, goes to 5,750, and we have to get out, and that means we make a loss. So obviously, our £10 a point is a loss of the same magnitude. So 250 points at £10, £2,500. So again, these things have different amount of times, that they're going to do. The FTSE probably won't do 300 points in a day, unless it's very volatile. So it might take a few days, to kind of be involved in. So I guess an introduction to financial markets is, what you're trying to do. If you look at your intratrader trading platform, you're trying to buy or sell something. So I mean, it's loads of people. I've been asked. I've done 1,000 webinars, guys. I've literally done these things for so long. It's very hard for me to kind of, bring something new to the table. people don't understand what the markets are, right? They fundamentally don't understand what the products are trading. If you don't understand the products you're trading, how can you ever try to make any plan or make any money? You can't. So for me, what you're always trying to do is find out where value is. Something's low, something's high, buy it low, sell it high. That's the basic rules of trading. Why do people forget that? You can trade all sorts of things, on Intertrader and the financial markets. I mean, anything from individual shares, stock markets, futures, equities, bonds. I mean, the list is literally endless. What is a share? I mean, why do people buy shares in companies? To be honest, I've never got this. I mean, the world's so transient right now, and so changeable. Why? Listen to Warren Buffett. He's been investing for 60, 70 years. Okay, he's worth 20 billion quid. Big round of applause. Well done. Okay. If I was buying stuff, I'd be worth £1 billion. I was buying it 80 years ago. I'm not that interested in Warren Buffett these days. What does he know? Not that much, to be honest. I make anywhere between, I'd say, £1,000 and £10,000 a day. Okay, I'm not interested in what something's going to go up, what something's going to go down. I'm not interested, what share price is going to be in 10 years. I'm not interested in the long-term view. I'm interested in making money. Okay, so the old-fashioned view of what is a share, what is, it's ownership of a company. You're buying into something that's going to be in your life forever, potentially. Something you pass on to your kids or something you sell. For me, I'm not interested in that. I'm interested in movement. So I guess, share prices, again, are determined by, supply and demand. So if you're buying shares in Google, Amazon, whatever, it's all variant, against people's opinions. Some people buy it, sell it. But again, if you're investing in shares, that's a long-term thing. The efficient market hypothesis is something that's older than I am. I mean, much older than I am. It's getting down to very, intelligent people that understood the force of supply and demand. So if all the information that is known right now is in the market, something comes to a normal price. So you think about the markets back in the olden days before the internet, before computers. It all comes together. People buy things and sell things because it's value. That's all a market is. Knowing all the information right now. Okay, I know what you know, so I think the FTSE is good now, or it's not good now. Okay, it's all about understanding what the kind of real time value of things is. I think a lot of people forget that people trade the markets. I mean, when you read my book, which is coming out on the 30th of September, you understand that people are just people. People buy things, people sell things. They don't really have any great intelligence. There's a few great people in the world that understand the markets through and through. I don't think Warren Buffett's one of them. I don't think George Soros is one of them, to be honest. I think there's a lot of people you never hear of, the big, big boys. And I'm quite big-headed, yeah. I think I know what's going on. And, I attract a lot of money to my fund, and, people come and, give me their money to trade with because I know what's going on. But I'm a tiny, tiny, proportion of that. Behavioral finance, you have to think about what the big guys are doing, what the funds are doing, what everyone else is doing. I think, a lot of people don't understand volatility and fear it. I mean, this is the VIX, again, the VIX is the kind of fear indicator versus the Dow. So as the VIX goes up, yeah, the Dow goes down. But then as VIX spikes back up, the Dow still goes down. So I think for me, the VIX is a bit of a non-entity. So what are the indices? Indices are an instrument that measures the stock market sector. So FTSE 100, 100 companies, DAX 30, German 30 companies, etc., etc. How's the price determined? Well, every company's not equal. Everything's not born equal. So they try and give a weighting average. So you multiply the amount of shares available by the market cap, and that's how you get an understanding of what a company's worth. Obviously, in the FTSE, there's 100 companies. The CAC 40, Germany 30. So think about that. I mean, if something comes out to Deutsche Post, for instance, in Germany, there's only 30 companies. So if something detrimental or very positive comes out, it's going to affect the DAX much more. If something comes out about the BP in the FTSE, probably a little bit less. Again, 100 companies versus 30. Think about how these things are built up. The FTSE, for instance, 7.14% is BP. So something might happen to the indices a bit more if something happens to BP, but it's more the kind of sectors, the groups, the banking sector, the pharmaceutical, connection, that kind of stuff. That all moves the markets. It's not really individual shares anymore. So then you move on to the Forex market. So Forex markets, FX, foreign exchange, whatever. The facts are that probably 5 trillion now is traded every single day. Okay, $5 trillion every single day. Think about that. It's an astronomical number. So there's very little regulation in the forex markets. That's why people love it. Banks trade it, individual, prop houses trade it, individuals trade it. There's no inside information, I would say, that I know. Okay, and I've traded markets for 15 years. But I mean, the very kind of attractive thing about the forex markets is that anyone can understand it. You're buying one currency against the next, so it's basically trading GDPs. If you're trading the euro dollar, you're trading the euro GDP against the dollar GDP. What's going to be stronger? Yeah, in the short term, medium term, long term. That's it. Again, think about the big players. Deutsche Bank, UBS. I mean, these guys, 20, 30% of the market combined. So think about what they put out, what they say. And then again, currency pairs are always traded in individual pairs. So you don't just trade one currency, you trade the euro against the dollar. So the first currency is the strongest one when the currency was made. So the euro, laughable, was strongest against the dollar when it was made. So the euro is priced in dollars. Yep, you got the Swiss, versus the dollar CAD, the dollar yen. Again, the list goes on. I mean, then you got commodities. Commodities are a little bit different. I'd say if you're a beginner trader, stay away from the commodities because they're just too difficult to trade. Oil, for me, when I managed the biggest trading floor in Europe, it was only done in teams of people. And, probably 15 people traded one oil product or a series of oil products concurrently. So for you to think you can trade oil on your own, it's probably not a good idea, to be honest. Obviously, there's energy, which is WTI, oil, as we said, Brent, crude. Then there's grain. Then there's soft things like cocoa, lumber, sugar, all that kind of stuff. And then metals, which are very big at the minute, gold, etc., etc. At the end of the day, I mean, for me, I would say, to be perfectly honest, that commodities are for professionals, not for retail traders. I mean, obviously commodities trade in different ways. You've got spot, forward, future contracts. But at the end of the day, we trade, here and now. So we trade, the actual futures or forward contracts. I'd say, again, things that affect commodities in different ways, from stocks, shares, FX, they're much more susceptible to things that, that move the markets like geopolitical events, supply and demand. Look at oil. It's very, very difficult to think how oil is going to be perceived in 100 years' time. So let alone think 6 months' time. All right, guys. I mean, that's a bit of an easy introduction to to trading, what you can trade, the products, etc., etc. Any thoughts? Any questions? Anything you'd like to ask? No, guys. Like I said, it's like quite a nice, easy introduction. Spread betting is a great way to get involved in the markets. You can buy things, you can sell things. There's a lot of things you can do. If you want to know anything more, guys, just give me a call or my email, or just get me on Twitter. sruffley@tradermaker.com is my email. At Steve Ruffley is the Twitter. I can discuss these things, but it's meant to be a bit of an interesting kind of insight. Trying to get you guys up to speed on what spread betting's all about. All right, guys. Well, anything else, just let me know. My email and my Twitter, and I'll speak to you soon. All right, guys. Thank you.